Much for tuning in. You're watching BQ Prime. My name is Alex Matthew, and this is Stocks in Focus, the show that gets you a few names and we discuss them in detail about the fundamentals, of course, and how the latest news is affecting the stock prices. Joining me is Sunny Agarwal, the head of research at SBI Securities. Thank you so much, Sunny, as always, for taking the time. And in fact, as we were preparing for the show, the selling has intensified in the equity markets, and the benchmark is now down about 0.75%, but holding above 18,100. It's not the low point of the day. It's trading above that, but in fact, it has seen increased selling. And among the stocks that we've decided to speak about, the two that I start with are the ones that are contributing, I think, the most to that decline in the benchmark, which is the HDFC twins. And it's not the fundamentals per se that we're speaking about today, because both of them have reported quite strong numbers for the fourth quarter. But it's the update on the MSCI, and that the MSCI intends to add HDFC Bank to the large cap segment, but the adjustment factor will be 0.5 as opposed to the previous thought of 1. And that is expected to cause outflows into the stock. Is this preemption of that outflow that we're seeing? We're seeing selling ahead of that event taking place. What is your rating on these two stocks?
Yeah, good morning, Alex, and thanks for having me on the show. So you are right that basically, if you look at the outflow, it is estimated that the outflow is likely to be to the tune of $150 million. And if I convert that into the volume, it's hardly 1,200, 1,300 crore of outflow, which is likely to happen. And I was just checking the daily trading volume on HDFC Bank, and that is around 3,000, 2,500 crore daily trading volume, which happens on HDFC Bank. So I don't think so it will lead to a massive correction in stock price. It's a knee-jerk reaction. However, the earlier expectation was that if the multiplying factor would have been 1, there could have been inflow of $1 to $2 billion into the HDFC Bank and HDFC Limited combined entity. So to that extent, the inflow will be restricted. But what I believe is that today's knee-jerk reaction is a good opportunity to add this stock to the long-term core portfolio. Anyway, both the companies have reported a solid set of numbers. And when both the entities are merged and it will be traded as a combined entity in the name of HDFC Bank Limited, post that also what we feel is long term, one can see a target price ahead of maybe 2,000 rupees over the next 12 to 18 months. So it's a good opportunity to add to the portfolio.
Let's also talk about the fundamentals while we're at it, because both of these companies reported net profit growth of 20% year on year. And a lot has already been said about the tailwinds for the companies, but there are expected to be some barriers that they will have to cross when that merger does take place, right? There's going to be a few teething issues that they have to deal with. How do you see this panning out for business over the course of the coming quarters?
Yeah, so definitely once there is a merger, there are certain hesitation that post-merger the bank may have to provide some fund for SLR, CRR requirements, so on and so forth. So that may overall increase the cost of fund for the combined entity as a bank. But what I feel is that institution like HDFC, in case there is a teething problem, it will be mostly for 6 to 9 months. But that's a good opportunity to add the stock to the portfolio. And even in terms of valuation, I was just checking the valuation today. ICICI Bank is trading at 1 year forward price to book of 3 price to multiple. And HDFC Bank, because of this all this speculation that there is likely to be some teething problem, it is trading at price to book of 2.8, 2.9. And earlier, if you remember, HDFC Bank used to command price to book value of 4 multiple. So what I feel is once the merger is in place, maybe Street will look for 2 or 3 quarters. And when the Street is confident, then it will again regain its glory of 4 price to book multiple.
So out of all of the private sector banks, then would you still say that HDFC Bank is your top pick, or would you pick another?
No, so if I want to look from an alpha perspective for next 6 to 9 months, definitely the alpha will be more in ICICI Bank as of now. And HDFC Bank is a stock which I would like to prefer to add gradually in my portfolio. And once the merger is through, once the HDFC Limited is out of the indices and HDFC Bank is trading, then probably we may see alpha in the HDFC Bank.
Fantastic. Okay, so let's move on to the next stock, which is Ceat. And incidentally, in our list, we have quite a few auto ank names. This is the one auto ank name that we're talking about. Ceat surprised on the positive, in fact, and you saw a return to double-digit margins during the quarter. better than expected, came in at 13%. The profit has come in higher by as much as five-fold, coming at 132.4 crore. First of all, what were your expectations for the stock, or rather for the earnings, and how are you reading this?
No, so definitely the benefit of correction in the crude oil prices is getting reflected in all the tire companies. 2 days before, MRF also reported a very fantastic set of number. So earlier I remember all these tire companies used to make a EBITDA margin in the range of 12 to 14%, and because of this increase in crude oil prices or whatever the other factor, maybe the margin collapsed to in the range of 6 to 7%, and now after a long time the margins are back in the double digit. So going forward, definitely due to the judicious price increase, at the same time due to the correction in raw material prices, definitely the outlook is good for all the tire companies, and especially for Ceat, which is more into the market. At the same time, they are getting good intro into all the electric vehicle portfolio. So if you see their presentation, there are many uh, vehicle model like XUV 400 or the newly launched MG EV vehicle. In all these vehicles also they have got a good inroads and penetration. So outlook is definitely good for a tire as an industry, and especially with the recovery in margin, now the valuations also look attractive. So at the current market price, the CAT is having a market cap of 7,000 crore, and if I annualize the fourth quarter number, so annualized profit will be in the range of 500 crore for a CAT for FY24. So valuations still look comfortable, and I feel that over the next 6 to 9 months, we may see stock price crossing the range of 2,000.
Okay, so add at these levels is your opinion, and you would continue to add over a period of time, right?
Yes.
Okay, let's talk about United Breweries. One disappointment in our list, and in fact, that is reflected in the stock prices, of course. The earnings, you see a 94% decline in net profit for the quarter, is coming at 9.81 crore rupees. And there's also some buzz about the management and the flux that they're currently seeing there, or the void that they're likely to see. It's a competitive landscape. Sunny, how do you see that this company will perform, and how do you rate the earnings?
No, so definitely there is a big disappointment in terms of earnings for United Breweries, being a market leader in the alcoholic beverage, especially in the beer segment. And with actually I was unable to go through the press release and all the stuff. But what I feel is that after trading at such a steep valuation and the disappointing set of number, definitely stock is likely to witness a derating over the next few quarters. I hope that maybe the June quarter is likely to be a better as compared to fourth quarter. There was some one-off number. I don't have press release right now.
So, I mean, okay, I haven't seen the exceptional number either, but I see that the EBITDA margins have come in at just about 3%, and that is comparable with consensus estimates of over 11%, and compared with 15.3% in the comparable quarter. So there is a significant issue on the operational side as well. How should somebody who's owning the stock treat this kind of information? And a prospective buyer, would you say that a wait and watch approach is better to take right now?
Yeah, so for a new buyer or prospective buyer, one should wait, and one should follow wait and watch approach definitely. And for existing, shareholder, what I would suggest is that this may be a temporary blip in the company's operation, because anyway the company is the market leader. They have been delivering numbers since many years. So anyway, one should continue to hold if somebody is having the share.
Okay, let's move to the two-wheeler manufacturers, and I've decided to club both of them reporting numbers, Hero MotoCorp as well as TVS. TVS, stellar set of numbers, right? Revenue up as much as 22%. You had EBITDA margins that came in ahead of expectations, again at 13.1%, net profit growth of about 21%, all ahead of expectations. And then you have Hero MotoCorp, which reported revenue growth of about 12.5%. EBITDA margin there also has improved compared to the previous quarter. It's coming at 13.3%, net profit up as much as 31.7%. So going seems to be good for both of these companies. How do you rate them?
Yeah, so definitely, a stellar set of number by both the companies. But if I have to choose one of them, I would definitely love to go with TVS Motor. So what is happening in TVS Motor is that the margin earlier, which used to be in the range of 5-6%, and now they have been consistently delivering double-digit margin. And at the same time, the product mix, the change in product mix is leading to the increase in average ASP, which we call average selling price for the company. And the advantage of lower raw material cost is definitely playing out for the entire industry. So the outlook seems to be good for TVS Motor in terms of volume growth. Their export business is catching up very well. On the other hand, the electric vehicle portfolio, which is the TVS iQube vehicle. Earlier, the company used to do a volume of 10,000 units, and now the management is very confident that they can scale up to the 25,000 units also. So overall outlook looks good, relatively better for the TVS Motor. However, Hero MotoCorp in terms of valuation looks very cheap. So it's a kind of value buy. Yeah. So Hero Motor, the problem is with the Hero Motor is that the company has become so huge for the company to gain a market share and deliver earning growth is slightly an issue. And that is the reason we are seeing such a cheap valuation for the Hero MotoCorp. So if I take an annualized dividend of the Hero Moto, that's come to 100 rupees. And at a price of 2,500 rupees, it's a very attractive dividend yield story also. So Hero Moto maybe a gradual accumulation kind of approach one should take. TVS Motor is definitely add in the portfolio with a price target of 1,300 to 1,500.
So in days past, even 7, 10 years back, we used to talk about Hero MotoCorp in the context of rural demand, because motorcycle sales generally are a lead indicator of that consumption side of our economy, right? So does that still hold true? And how do you rate the expectation of volume growth in the new financial year then?
So overall, as of now, as you rightly pointed out, that two-wheeler industry is dependent on rural demand to some extent, and the shift which is happening from incumbent in ICE to the EV vehicle, the maximum disruption is in two-wheeler space only. So if you see many players like Ola, Ather, and you name the company, and every company is in the two-wheeler electric segment, and that is to some extent disrupting the volume of the incumbent business, which is the ICE business. And we have seen that many players like Ola and Ather, they have made quite a substantial good inroad in terms of volume in this segment. And at the same time, what has happened in last 2-3 years, the cost of ownership of two-wheeler has increased significantly. So I remember 3 years back, if you want to buy an Activa, that used to cost 50,000-60,000 rupees on road. And right now, the new Activa on road comes to around 90,000 rupees. And that is purely because of a lot of change in regulation. So the insurance cost is loaded up. At the front, there are a lot of safety regulation which has came in, and that is the reason we are seeing that there is some sudden increase in cost of ownership, and that has dented the volume growth also to some extent. But having said that, going forward, if the monsoon is good, definitely we can expect a good demand from rural areas, and that's definitely positive for Hero Motor.
Speaking about the weather, it brings us to the last stock of the day, which is Blue Star. And the earnings are, at least the PAT number, is significantly ahead of expectations, coming in at 225 crore rupees. The EBITDA margin was more or less in line with expectations at 6.8%. But it's not just the earnings that I want to ask you about. There's also a report that talks about lesser demand for ACs in the north because of the fact that unseasonal rains have cooled temperatures over there. What are you reading about the summer sales that you check with, if you've spoken with your dealer checks and all of that? What does that suggest, and how do you rate the numbers right now?
No, so in Blue Star, one need to look at one-time exceptional item. So there is 130 crore gain on account of the sale of land of Thane land. So if I deduct that number, the number comes to around 120-130 crore PAT for the Blue Star. So in terms of valuation, I feel the company is fairly valued. So maybe trading at more than 30 price to earning multiple. And on the top of that, due to this unseasonal rain, definitely the volumes are going to see some pressure in the month of May. And anyway, from the June onwards, since it's the monsoon season, I feel the main the sale season for any air conditioner company is March, April, May. And if May is going to be under pressure in terms of volume for the company, definitely we may see some pressure in terms of the profitability for upcoming, that is June quarter number. So I would not like to take a fresh bet on any consumer durable company at this point of time. Would rather be playing this story through cables and wires. So companies like Polycab, maybe which are delivering a very fantastic set of number. At the same time, correction in the crude oil prices and metal prices is helping them to boost their margin. So rather than consumer durable, I would like to play a story through wires and cables.
Interesting. That's interesting perspective. Thank you so much, as always, Sunny, for taking the time. We've had an interesting chat on quite a few stocks that are in focus today. Viewers, do stay tuned. Lots more coming up over the course of the day. And this is BQ Prime.